We appreciate all of the guests who have appeared on our show and sincerely thank them for providing you, our audience, with useful information. However, the advice our guests provide is theirs, and we encourage you to seek out a professional if you have specific questions about any topic we cover on the Crushing Debt Podcast. On this week's episode of the Crushing Debt Podcast, the Bitcoin Unbanker.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law. And as those of you know that listened to last week's episode, I attended the Florida Bitcoin and Blockchain Summit, the first ever or the inaugural Florida Bitcoin and Blockchain Summit. And my guest this week is from that Bitcoin and Blockchain Summit. Now, before we get to the guest real quick, I do want to talk about our sponsor, Sam Cohen, who is with Attorneys First Insurance. And I understand he writes errors and omissions insurance, malpractice insurance, E&O coverage for attorneys and title companies in Florida, all over the country. Also now has a specific focus on Texas. And so if you're an attorney or a title company and your E&O insurance is coming due, contact Sam at sam@attorneysfirst.com or www.attorneysfirst.com, or if you really just want to support the show, introduce an attorney or title company that you know to Sam Cohen. Again, sam@attorneysfirst.com or www.attorneysfirst.com. Those of you that listened to last week's show know that I was at the Florida Bitcoin and Blockchain Conference, and it is something that very, very quickly caught my attention, and I've started to do a pretty deep dive. Honestly, haven't invested yet, but maybe today's guest will change that. So he is a former bank operations manager with over 20 years of financial service sales and operations experience, most recently as Citi's North America settlements manager. His roles have included institutional client service, product development, project management, international settlement, and central bank settlement operations. At Citi, he was responsible for executing business requirements to replace and migrate Citi's entire U.S. direct custody and clearing settlement platform onto Citi's global custody settlement platform. He successfully aligned all market applications, processes, and procedures into a global standard to create efficiencies for the bank's combined resources. Throughout the project, he served as a unique subject matter expert to bridge U.S. needs with a global solution. He became passionate about the potential application of blockchain technology for wholesale banking when details about the utility settlement coin project were released in 2017. He made it his mission to spread the word about potential application of USC using many other innovative company solutions. He created E2E Blockchains, or end-to-end blockchains, as the culmination of the effort to connect applications end-to-end through the blockchain ecosystems, and we're going to explain to you what all of that means. But my guest on this week's show, Rich Foster. Welcome, Rich.
Hey, thanks a lot for having me. And that was quite the long intro. So it's different hearing someone else talk about yourself like that. So
well, it's all true. It's on the internet, so it must all be true.
Absolutely right.
So explain what I said in my show last week. When people hear blockchain, they think of Bitcoin. Mm-hmm. But blockchain has uses beyond Bitcoin. And your company deals a lot with blockchain and a lot with virtual currency and cryptocurrency, but just from a basic perspective, what is blockchain? How does it work?
Yeah, and just to give you a little background about how I got started in my involvement, I got started in 2017 with, like you explained, that utility settlement coin project. I was in Switzerland visiting one of our clients, one of the big banks out there, and at the time I had always thought of Bitcoin and cryptocurrency as kind of being that illicit type of dark web or the black market kind of activity. And so when I saw the biggest bank in Switzerland getting involved with this what they call distributed ledger technology, and we'll get into kind of what all the different terminology is and the different applications for that technology, but basically they were building out a solution for banks to settle money between themselves intraday, basically real time, which you can't do in the system today. People, think about like Venmo or Cash App, and they think, well, the money's transferred, so it's got to be settled. It's not actually settled in the financial plumbing all the way down to the central bank accounts. So most of my clients that I work with are the wholesale banks that are actually settling the real fiat currency with the central banks. And so really what the technology behind Bitcoin and all of the blockchain applications, that distributed ledger, you can kind of look at it like from an accounting perspective. So today, the way accounting works is you basically have, if you think about your bank account and maybe like you have Quicken or you have some sort of, application that you use to reconcile your books, the true source of the record is the bank. So even if you say you think you have $1 million on your Quicken software, if the bank says you have $1, you have $1. And most of the accounting record keeping, it's a centralized trust system. And so that's why a lot of the banks and a lot of the other institutions are around, is because you have to trust at a party that's going to be the verifier of the records. And what blockchain does is it actually takes that trust away from a centralized third party, and it decentralizes it amongst all the computers. They're called nodes in the blockchain speak. And so what Bitcoin did was it created this decentralized record keeping for one specific purpose. And one of the differences between blockchain applications, and you hear about different coins, Dogecoin has been getting a lot of the news lately, but each one of those networks are kind of separate, and they all have their own different mechanisms for providing that decentralized trust. But for all intents and purposes, that the source of the big, how it's going to change the world is you're taking that trusted third party and you're decentralizing that, and the options are endless once you get to that level of understanding.
So, sort of as and you can tell me if I'm getting this right or not, but sort of as a real world example, I settled a case on behalf of one of my clients. We got paid by the defendant, so the defendant sent me a personal check. I then deposited that personal check in my law firm trust account. Now, my client is getting upset because she wants the money. And I said, well, wait a minute. It's a check. It's a personal check. It's not a cashier's check. It wasn't a wire transfer. It wasn't any of that. So even though my bank says it's available funds, it's not necessarily cleared or collected funds. And so if something were to happen and the defendant that sent me the money, ignore the legal issues for a minute, but the defendant that sent me the money, if somehow cancels the check, it could be pulled out of my bank. So does blockchain fixes that by pulling the bank out of the mix? Is that a dummy way, my dummy way of thinking of it?
No, and the problem we have sometimes with explaining it to the banks is if you look at it from the current system and you tell people, this is going to change the banking system and what currently happens, the first thing bankers hear is, I'm putting myself out of a job. But in reality, the role of the trust in the bank is just going to change. And so to your point, right? So like a check, and even today's day and age, it's hard to even see people using checks. But You're right. You have the ability to do the stop payment. You have the ability. There's so many different points in the whole transaction before it actually, what I say is physically clears and settles.
Right.
Where the true books on the central bank's account has been debited from one institution and credited to the other. Even same-day real-time gross settlements, which are the wires, you pay $40 for that still goes through a system of checks, validations. Even then, you can have the wrong account number. So a lot of my time was spent, locating money that's sitting kind of in an intermediary account that couldn't get further credited to the final account because you're missing some number or some piece, on the transaction. So it does, from that perspective, take away the ability to kind of front the money or get use of money, which pretty much it's credit. That's what a lot of the banking institutions are formed for. It does take away that, but there's so many other things that kind of benefit from that. And then on the flip side, there is the benefit of having the third party institutions is if there's a mistake, even from the defendant's perspective, just say he accidentally wrote an extra zero. I don't know, just as an example. There's recourse that he can have to his bank, to different layers in the process. With blockchain, because it is decentralized and it's instantaneous, it's immutable. You are kind of on your own, with doing the transaction. So if something does happen incorrect, it's not like you can just hit the reverse button or unwind button. So there's a little bit of a take, on that piece.
Well, one of the things that we talked about, you mentioned fiat, which is my understanding is when the coin is tied to a government's currency. So,
right.
If it were a coin that were tied to the U.S. dollar, it would be a fiat coin. But Bitcoin, in its purest sense, is not tied to any governmental agency. It's not fiat currency. Is that right?
Yeah, that's absolutely correct. And like I said initially, so each currency that's been developed, Bitcoin is the original, cryptocurrency, the decentralized white paper that was written in 2008 by, it's an unknown person or group called Satoshi Nakamoto. We won't get into that whole conversation, or maybe we will at the end,
maybe,
because I've got my own opinions on that. But yeah, it was written in a certain way, and one of the things that makes it unique is that they have a set number of tokens that can actually be issued. So you notice with like anything that's backed by the central bank, we're not even on the gold standard anymore. So the central banks can just issue any amount of money, and that's kind of where you get into the whole, the debate of what the real money and what are you actually using for the debt and that sort of thing. But with Bitcoin, there's already a set amount of 21 million that's going to be issued altogether. And in the protocol, it's written by how many can be issued at a certain time. So there's a certain time frame of what it takes to process transactions. And so it's not a matter of making it faster or slower for the amount of volume. It's just for the computational power to make everything a certain difficulty level to mine it. But it's not owned by any central bank or any government institution. And the biggest, I think, aha moment for a lot of people is that no one can be taken off the system. You can't have a sanctions list that says, hey, you're no longer allowed to use Bitcoin, or you've done something wrong and you can't have access to it.
Your credit is bad. You can't buy Bitcoin.
Yes.
That can't happen.
And I think the hard part for people to understand in the developed countries is they're so used to having a stable form of payment, and especially the U.S. dollar being the reserve currency of the world. It's hard for people to look at not being able to spend their money the same from even one year to the next because of the devaluation. So when we were in Miami, the Venezuelan dollar was being handed out, and there was actually a whole art project. They had a huge dumpster full of these. It is millions and millions of Venezuelan dollars, and they were just kind of making it rain, and it was like a big party and stuff. But then you look at the value of it. A stack of those Venezuelan dollars, it would take 500 stacks to make 10 cents. And so those countries, and you saw El Salvador just actually authorize the use of Bitcoin for legal tender.
Right.
They understand it more because they've seen how the valuation of a central bank backed currency can quickly lose its use, and this gives them a common currency outside of the global financial system. And this is coming from the banking world, where I get the reasons that there needs to be a structure and that sort of thing for it, but it gives, we call it the unbanked access to the financial system. And again, it's hard for people to understand that when it's very uncommon here in the U.S., but the other countries, it's a huge deal.
So if someone wants to contact you, it's info@E2E Blockchains.com. But let's talk a little bit about what E2E Blockchains does. So basically, what is it that the company does?
Well, so going back to that initial on-ramp to Bitcoin, really the initial way, to get Bitcoins, what is to mine. And so anyone can download the node software, start running the software on your computer, and attempt to win the reward for doing the mining. Unfortunately, that boat is past. Now you have to have pretty much 10,000 mining units in a really cheap electricity type of location. And so basically, the way to get into the cryptocurrencies today is to actually use like a Coinbase or a Gemini. And so what you're doing is you're bridging the fiat world, or the off ledger piece onto the ledger, or onto the chain. But once you're at that stage where you're off the chain and you're on the legacy system, then you're still dealing with, like you talked about the example with the check from your customer and that sort of thing. And everybody doesn't necessarily want to use a volatile currency like Bitcoin. Just in the same way that the Venezuelan dollar changes, you want to be able to know if you get paid in Bitcoin for your salary, that you can pay your rent equivalent to what you made in the salary. Not all of a sudden you have half of the amount of money that you thought you had. But going back to the technology still has a use case, and that distributed ledger piece can be used to bridge the two systems. And so going back to that meeting with our client in Switzerland, what was actually developed out of that project, 16 more banks got involved and built a consortium called Finality. It's Finality. So Finality International was formed at the end of 2019, right before 2020, and they are building out a group of wholesale banking currencies that are almost exactly like the central bank currency. So they're working on the top 5: US dollars, euro, British pound, Canadian dollar, and Japanese yen. And what they're doing is they're creating a coin or a token that represents the balance in the central bank account. So it's almost as if for the US dollar, it's almost as if the Federal Reserve is issuing this token, but it's issued by Finality, but backed by the reserves that are in the central bank account. So if anything was to happen to Finality, if they go under, the token is still backed, and it's still controlled from a bankruptcy perspective. Finality doesn't have control of the assets. So it's the closest you can get to a central bank issued currency that's on the blockchain. And so that's Finality's piece. They are just building that token. They are working with the governments, the central banks, to allow them to open the account. And not surprisingly, it's not something they just want to roll out the red carpet for. So it's been the 4-year project has not been developing the technology. That's been done in 6 months of proof of concept. It's been 3.5 years of convincing the central banks that we should let Finality open an account. Wow. And so we're getting close. We believe that the Bank of England most likely will allow them to open the account. They've already had the application. And so once you have that currency, that digital currency that is the equivalent of the fiat currency, now all of your operations and things that you do today with the current legacy settlement system, you can do with this currency and provide real-time instant settlement. So it's almost like taking if you go back to the Venmo Cash App transactions, or even your check, once that's presented, it's almost like it's pre-funded, pre-cleared, and then as you execute the transaction, it's settled instantly. So you're not doing the transfer, clear it with this bank, go to the next bank, check everything. It's almost like it's everything's validated on the blockchain. So there's no, changing the records, and you can settle it automatically. And so we're building out solutions on top of that. So one of the solutions is an FX solution. And again, people think you can go and trade like your US dollars for your British pound and it settles instantly. It's not instantly. You have to make sure the funds are in the other currency, and there's a whole bunch of mechanisms in the back that even the banks on a day-to-day basis, they can't settle anything for the most part same day. Every FX trade is spot the next day. So then what you get into is you have funding issues where, and most businesses are like that. We work with a lot of kind of mid-market institutions, that anybody that does kind of global financing where they're funding different accounts. You have to have a buffer because you don't know kind of what your daily costs are going to be. And so you can build out solutions where you can transact money for a matter of hours versus overnight. And so it just makes it easier to manage your liquidity funding, basically.
Right. Okay. And so that's basically what your company does, is it helps people get digital money. It helps companies that want to transact in cryptocurrency, basically. Is that about right? And
the currency they would be transacting in is almost the equivalent of the fiat currency. So if they do anything, in US dollars today, you can just add this currency as just either. It really just gives them two different solutions. You can either save money, less interest, because you're not having to pay, for overnight or a week or whatever. Or if you have extra money to lend out, you can earn interest on the money that they have as well. So it gives them, just another use case for funding for that currency.
Does it matter so if a company approached you and said, we only want to deal in Bitcoin, or we only want to deal in Ethereum or Doge, or what, does that matter for you setting up the system for the client company? Does that matter?
No, actually that's easy because that's already built, that's already developed. And so that it's just kind of plugging in a new, I wouldn't say a new payment system, because a lot of the applications, it's your same point of sale application that you use today for your credit cards. We can definitely set up, when we do start with that with some companies, just to get them understanding what cryptocurrency is and what distributed ledger is. We can set them up with receiving payments in those cryptocurrencies. And so forget, this whole variation of US dollars and the equivalent of US dollars. If they just want to open a wallet and have someone, because some people do want to, pay for things in cryptocurrency, we can definitely set them up and get them just a direct wallet and connections. And depending on what they use, we have some that connect right to QuickBooks. So there's no change of application. You really want to make it as seamless as possible to the merchant.
Yeah.
And so we've got a few things that are connecting directly to whatever they currently use. And then we can automatically, some don't want to keep the currency. They'll let the customer pay for that, but then they want to put it back into the fiat. And that's kind of where we bridge the two also, where, they can receive it, but then automatically just converts right into their US dollars or whatever bank account.
I've had one client in my career recently who asked if I would take payment in Bitcoin. And at the time, I didn't understand it enough. So at the time I said, no, I'm sorry. 2020 hindsight, it was probably worth a fraction of what it's worth today. I should have said yes.
Right. Yeah. And everyone, looks back and has FOMO on that. And anyone that says they would have held it, I guarantee you people still would have sold it anyways. It's easy. But yeah, it's a very good point. Actually, when we started in 2018, before we went to the actual wholesale banking piece, that was one thing we were kind of working to get the merchants set up just to accept that. And a lot of them did say, they're like, well, no one's really asking to pay for that in there. So it's kind of hit or miss. I think it's kind of hit or miss with what the market's doing too.
Yeah.
So, we got a big jump in the prices earlier this year. And I think I had more conversations over Christmas about cryptocurrency than it kind of reminded me of like in 2000, the .com, because I started in the investment side. And, it definitely felt like, what stock should I buy? Like I was getting so many questions from people about, what is cryptocurrency and what should I buy and that sort of thing. So,
wow.
Anyone that thinks they've missed the boat, I will say 100% you're not late to the game. There's probably about a quarter of the people that are in it. And so you still got another 3/4 of the people that are not a matter of if, but when everyone, gets involved. So you're definitely not late.
Well, and then you got the flip side of the coin. I have a buddy of mine who had an air conditioning company. And this must have been almost when Bitcoin first came out or was on the radar, who dabbled in it and said he would accept Bitcoin in exchange for whatever work he did installing AC units, maintaining whatever. The problem is, and I talked in last week's show about hot wallets and cold wallets. The problem is he had a offline, so cold wallet, and then lost that drive.
Oh,
and so whatever Bitcoin he put on it is either in the hands of someone else or in a dump somewhere or broken or in a garbage or gone forever. And so he's kicking himself now because who knows how many hundreds of thousands of dollars he has on that drive. And that's where like you said, 21 million is all that's going to be issued. I was hearing estimates this past weekend that between 3 and 5 million is on cold wallets like that people will never be able to access ever again.
Yeah, absolutely. And that's what I said initially. The flip side to having decentralized ownership is there's no one to protect you from yourself.
Right.
And so there are, the market is definitely a lot more mature than it was even 3 years ago. And so there are solutions kind of in between the two. Some people argue that, if you don't own your own private keys, you don't really own your crypto. And so they're of the case, like, they don't put their money on the exchanges or that sort of thing. But same thing with the banks, where you kind of have a little bit of recourse if you do make that mistake. That's one of the benefits to using those, third-party exchanges and that sort of thing is to save that. But then it comes with the same risk as you're trying to kind of get away from. So it just depends on what your use case is for actually using the blockchain technology. And I tell people too, it's one thing to have like an on-ramp to like the Coinbase or the Gemini to get the currency. But me personally, I take it off pretty much right afterwards. And depending on what I'm using it for, I'm not keeping it on the exchange because I'm almost looking at it from like two different financial system or financial worlds. And so once it's in there, I don't usually take it back out.
Okay.
I'm just kind of going between the different currencies and that sort of thing. But, my wife was kind of joking because I also try a lot of stuff out just because it's my company and my business. So I have tons of different wallets and tons of different, accounts and that sort of thing. And so my wife was joking. She's like, well, what happens if you die? Like, how am I going to get access to all of this? And I'm like, well, that's another solution that someone can build, I don't know what you would call it, not like a probate, but almost like a will or some sort of.
Well, and I think that was a topic that came up this weekend as well in Orlando. Was there is no probate system, so there is no court that can say, if something were to happen to you, the coins would be transferred to your wife. There's no, the court doesn't have that kind of jurisdiction, and it reminded me when my wife's grandfather passed away. He had this book that he had actually titled the Doomsday Book, but it literally had here's my financial advisor, here's his number, here's my 401k, here's the account number, here's the account number, here's the password for this. So I guess what you would have to do is have someplace safe all of your keys to all the various wallets, and that would be and your wife would just access through your computer or phone or however you do it and have all the keys and whatnot available, which again, it's decentralized. So if someone breaks in and gets a hold of that book, now they've got access to everything.
Yeah, that's exactly what I had to show her, where it all was. And, anyone will learn how to do it if there's a bunch of money, to be had, to figure out how to, what is the key and that sort of thing. But I just told her, like, this is the information you're going to need. If anything happens to me,
right,
someone, can show you how to access that. But yeah, you're right. I mean, it goes back to, it's kind of like if you lose your wallet, or, if you have cash that's in your wallet and someone steals it, or it's no different. But it's funny you talk about the losing the key or being the only person. There was a CEO a few years back that supposedly was the only one that had the key, and he died. And so the company, no one can get access to any of the funds because he supposedly was the only one that has that. So they actually were trying to like exhume. It was a crazy story, but yeah.
So,
Yeah.
I guess my sort of related to that question. You talk about the banking aspect of digital currency and the fiat aspects, and here in the U.S., I mean, as being in that industry, it's highly regulated, and we had the state of Florida Office of Financial Regulation at the summit, and I know there were a couple of state legislators at the summit, and so either from a banking perspective or from a general perspective, whichever, can this be regulated at all? And if so, how? I mean, I guess the only regulation you could have is if I own if I develop the Coinbase or the Gemini site or app, that could be regulated depending on what state where it lives. But how do you? Is the answer you can't regulate from a pure sense?
You're absolutely right. The only way, and actually, I went to Miami before Orlando, so I had a long week of crypto and blockchain discussions. But the Miami one, Christian Carlo, who's running the Digital Dollar Project, and Brian Brooks used to be the Office of the Comptroller of Currency head. So they were speaking on that. They're kind of like me. They get the crypto side of it. They want to fix the current banking system. But they did say, it's very easy for the regulators to just unplug the financial system from the cryptocurrencies, and you're back to square one. Which is, you have to mine it to get the currency and that sort of thing. And so what they have been doing is actually regulating the exchanges. So like you said, the Coinbases and those guys, basically anyone that touches the regulated currency, that's how they're trying to regulate the access to it. But they can never regulate the actual the nodes and that sort of thing. Even when they say, it's illegal to mine it, they'd have to come in and confiscate the actual the hardware applications. That's as far as that to me, I don't think that's ever going to be the case in the U.S. at least, because there's so many other things that we have that are tied to, like I said, the financial system, that they can just easily take it away from that way.
Right.
So that piece. And it ties into the central bank digital currency. So that equivalent. So if the central banks actually issue their own tokens, right? That's one of the things that people are concerned about, is what kind of privacy and what information would the governments have, and can they take that away from you? Unlike cash, once you have cash, they can't come in and confiscate your cash. There's already some countries that have built their own central bank digital currencies. So Bahamas is one that I always use because people are kind of close to the Bahamas here in Florida.
Right.
And visitors can actually use it. And they have certain, legal ramifications for certain dollar amounts, but that exists today with cash too. You can't come into the bank and deposit $10,000 without getting a suspicious activity report. Banks have certain requirements. So even people say, cash is private. It's up to a certain dollar amount. And so Bahamas has a certain dollar amount too, where you don't give any information up to, I think it's $500, and you can have access to this, completely anonymous wallet that you can transfer digital cash with, basically. And so that's one of the things they're working on with the Digital Dollar Project in the U.S. is that privacy level, at a certain dollar amount. But you have to trust, whatever network's being built on that, if the government, can get access to it and that sort of thing. And
right.
That's another debate, another debate that goes back and forth in the crypto world.
So as someone who's got experience investing in or using, if there's a listener out there that just wants to get started, or maybe a podcast host that just wants to get started, what would be your first suggestion?
I always suggest Coinbase and Gemini, just because they're both regulated. They were the first regulated exchanges. They're safe, and as far as the use of their applications and the amount of coins they have, those are the two main exchanges that we recommend. There's a bunch of other ones that you can use as well, but I would recommend just going to Coinbase.com. I can actually give you some referral codes as well, and you get free money. But they do ask for KYC, and so sometimes people get a little scared. It's know your customer, so they ask you for your driver's license. It's basically like opening a bank account.
Okay.
And so, if people just want to get involved and just have the cryptocurrency wallet and that sort of thing, and then usually the next step is I usually have them download a wallet that is their own keys. So Edge Wallet is one of the wallets. They actually sponsor block spaces as well. They've been in a space. They're really good, and that helps people understand kind of the ownership of your keys. So with Coinbase, you've got the address, but you're not really controlling the keys. With Edge Wallet or some of the other wallets, it's actually stored on your phone. You can still back it up, and you can take it to other exchanges and other applications, and that kind of helps people understand. Okay, this is like a real physical type of application that Edge does not have any access to. It's encrypted just on your phone. So
Coinbase would be like a hot wallet, and Edge Wallet would be a cold wallet.
I mean, technically speaking, anything that is connected to the internet is considered hot. So really the only cold wallet is one where it's completely like the Trezors or the Ledger wallets, where the one like your friend lost. Yeah. Those are the true cold wallets. I liken it to if it's one where you've got a user ID and password, I kind of consider that like the extremely hot, super hot wallets. And then the ones like Edge are, it's just your particular device.
Okay.
But
okay, got it.
Not to get too technical on that.
No,
but I'm sure some people will be listening saying that's not what a cold wallet is or a hot wallet. But
yeah. And I get, so nothing I'm saying is, don't take me as the expert. I'm just asking questions.
Yeah, no, definitely.
So, well, anything else that I didn't ask? Anything else you want to mention? Anything we missed?
Yeah. So I think going back to your question of what someone would want to do to kind of learn about that, buying and holding is one thing, but the cryptocurrency wasn't really designed or wasn't built just for people to buy and hold and try to get rich off of the value of it. It was designed to use. And so there's a lot of use cases out there, lending protocols, earning interest, and that sort of thing that you can do with this. That is not just, buying the currency and just holding it and hoping that your Dogecoin goes up. So I would definitely recommend jumping in right to the initial two. So Bitcoin is like the OG, the digital gold, but Ethereum is really the use of the technology. So I would recommend that anyone's getting started with that. Once you get the currency and you see kind of what a key is and how to do your public address and that sort of thing, then jump into Ethereum. And I would recommend, learning a little bit about the smart contract functionality and how all of the blockchain solutions actually help. I wouldn't say fix the problems, but just gives you different solutions to things that you can't do today. I know we were going to talk about NFTs and that sort of thing.
Yeah.
In NFTs, it's called non-fungible token. The easiest way to describe that is it's a digital record of ownership that only the person that owns the NFT can have. And so you can pretty much digitize the ownership of anything, physical or digital. And I liken it to like real estate, right? So to record your deed and record everything, you have to go to the clerk of court. That clerk of court is the kind of the owner of the record. With NFTs, the blockchain is the owner of the record, and whoever has an NFT, that's where you see the ownership of that particular house. Obviously, the house is not on the blockchain, but it's that record of ownership that's on the blockchain. And that's just one small little piece of the bigger area out there. So I always recommend to people, don't just buy and hold and just sit there and check the price every day, because that's not the point of blockchain and cryptocurrency.
Yeah, if you're going to do that, you might as well just go to penny stocks and watch them go up and down every day.
Exactly. That's not the world changing solution that we're all talking about here. So,
well, and to go back to NFTs for a second, my understanding of NFTs is that they're more, at least for now, they're more applicable in the art world, in the music world, in the creative space, and to me, that's where, at least for now, NFTs are having the most value, the most discussion is, hey, an artist that just digitized their picture, or a musician that just digitized some portion of their song, or the painter that digitized the picture that they just painted. That's where could there be any uses for NFTs beyond that?
Yeah, and it's going to take off initially from the digital piece, because right now it's pretty much impossible to kind of control the digital space, because everything is pretty much a copy. Anytime you send a file to somebody, you're sending a copy, so it's not like there's one record of that. And so the first use case is definitely where putting that stamp of ownership on something that's digital, and music is a perfect example. Kings of Leon just released their album in conjunction with their regular releases, but within that NFT, another thing that you can do, which you can't do in any other system, is if you compare it to like a CD, right? You go and buy your CD at the store, and then you go to a yard sale or whatever 10 years later and you sell it. The artist doesn't get anything from your sale to someone else at the yard sale. With NFTs, you can actually program that to say for perpetuity, like every time this gets resold, the artist gets 5% royalty. Wow. And so you already have this revenue stream that doesn't even exist today, and you can do that with anything. We're doing things with fitness companies to actually do the actual like personal training sessions and booking the actual gym, and then giving incentives to come. Like if you come to the gym, you get a certain incentive every time you do a certain session or whatever. So there's different things that you can do, and it's automated. So it's not like, you have to have some card or whatever and go and someone has to check it off and do that sort of thing. It's just, it automatically just gives you those incentives and that sort of thing. So the first piece, definitely was the digital art and things that are digital. But once people understand what the NFT is actually giving you ownership of, because people are saying, well, I could take a copy of the picture or the video, like it's not unique. It's the same thing as a painting, right? So you have people that have paintings that they've put in the museums, anyone can see it, but only one person has that, that physical certificate that says they're the owner of it. Right. That's all it is. It's just giving you the digital ownership of that, rather than having to go to Christie's or somebody to verify that it's a true certificate, basically.
Yeah, and I know there were discussions, although I went to different sessions, but I know there were discussions of like taking a picture of a celebrity or taking a picture of a sports personality, an NBA player, an NFL player, whatever, and then selling or I don't know what the right word is, but creating an NFT out of that.
Yep.
And that brings in some legal issues in terms of image and copyright and whatnot, but it was a interesting concept anyway.
Well, and that's a great point. So like copyright laws still exist. So I can't, and I think there was a couple of recent sales that got canceled out because they had like a copyrighted logo or something on there. So, you're just because you're digitizing the ownership, it's the same thing as when I write articles and I want to get a picture, you got to go to Shutterstock or Getty Images and you got to pay for that use. If I don't do that, they have to find my article and they have to find out that I used it without their permission. It's not like they're going and searching every single article and like, oh, that's my picture, so you can get away with it. But yeah, that copyright laws and that sort of thing definitely still exists, and you're not going to get away with it just because you're on a decentralized network.
Okay, got it.
That's a good point. And actually, so going to NFTs, that's becoming really big. I would recommend OpenSea. OpenSea.io is one of the big ones out there. Without getting too technical about how to process it, anyone can go out there and actually issue their own NFTs, and you don't have to pay for the actual transaction to actually make it until it sells. And so that allows people, because normally you have to actually pay what's called gas fees. That's the Ethereum speak. So the network fees that are used to actually make transactions usually have to be paid before it can even get put on the blockchain. OpenSea has it's called lazy creation. It's a dumb word for it, but it basically lets it be sold out there, and then it actually gets minted or created once it's sold.
But you would have to have an Ethereum account or whatever it's called to do that?
Yes. And so that's where we start. We started with the Coinbase.com, then we got the Edge wallet, and then you can get specific Web 3.0 applications. So there's a wallet called MetaMask. It's specific to Ethereum. and you can actually put that on your computer and link to all the different websites and sell things or buy things. And it's actually like a digital identity. And so like when I go to these sites, I don't log in with a user ID and password. I log in with my MetaMask wallet, and the fact that I have the ownership of the keys tells them that I am who I say I am, and I just have to link the wallet to that website.
Wow.
So that's what I said. Start with the Ethereum, and there's so many other networks like Algorand and Cardano that are kind of competing with Ethereum, but that's the original Web 3.0 application. So I've got some domains that I have, and honestly, a lot of the stuff I do, I just push buttons. I've probably broken a few computers. I'm no expert either, but I'm more of a visual learner. So I've made some mistakes. It's not forgiving. So I've sent people 0 Ethereum, but still had to pay the fees to transfer $0. And I'm like, why didn't the system tell me I was transferring $0?
Wow.
It doesn't assume what you're doing. It does what you tell it to do. So,
any books? I like reading. So, any books that you might recommend?
I just had that up on my computer. And the senator or the representative that talked in Orlando brought it up. It's called the Bitcoin Billionaires.
Yeah.
Because I got a few that are a little more technical. I'm reading one right now called "Move Over Brokers. Here Comes the Blockchain." It's taken me a while because he dives into every technical aspect of it. So I'm learning a lot more from that one, but I wouldn't recommend starting off with that one. Yeah. And there's another one, by Anthony Lewis. I forget the name of it. I'll have to get it over to you.
Okay.
That was one of my first ones that made it very, generic, very high level. You're not going to really get the ins and outs of how everything works, but you'll get a basic idea of the concepts of, why, the private keys are pretty much unhackable.
Cool. Okay. Well, thank you. I really appreciate you being a guest on this week's show. Again, if you want to contact Rich, anyone listening wants to contact Rich, easiest way is info@E2EBlockchains.com, or you can check out his website, which again is E2EBlockchains.com. All that will be in the notes. Anything else before we try to put a bow on the episode?
No. I think that the summit was really good. I saw a lot of new people there that are really interested, and so I think it's, like I said in the beginning, you're not late if you think you're missing the boat. So
yeah,
just jump right in and have fun. I'm here to answer any questions you guys have from a retail perspective, or if any business owners want to get involved.
Cool. So with that, I will end today's episode. Like I say at the end of every episode, I hope that at the end of the month, you have more money, rather than at the end of the money, you have more month. I think Bitcoin and altcoins and cryptocurrency could be a great way to make a lot of that happen, which is why I went to the summit, which is why I'm starting to deep dive and obsess over over everything right now. So thanks again to Rich Foster, E2E Blockchains. Thank you again, sir, for being a guest on the show.
All right.
And
thanks a lot.
Yeah, so with that, I will end this week's episode, and I look forward to talking to you in next week's episode of the Crushing Debt Podcast.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.